Good morning, everybody. It's the 21st of November. We are Signal Centre Talking Ball. I'm Joe, joined by Steve this morning. How you doing, Steve?
Good morning. The A team are there, mate. It's me and you.
Absolutely, yes.
World
The
Cup started?
originals. World Cup started, yeah. Did you see the first goal yesterday that was disallowed?
No, I didn't. I didn't see
Ah,
it.
just
Was
looked
it
like
bad?
blatant cheating from the Qataris. It
Oh,
was
really?
an offside
VAR?
goal,
Was
but
it a
everyone was
VAR?
like, "What the hell?" Yeah, I think if you there was some evidence of it, but it looked a bit
Yeah.
dodgy, let's say.
There was a bit
Anyway,
of talk about it being a rigged match as well, wasn't there?
was
There was
there?
a lot of stuff on social media that Qatari were going to win them. Was it Qatar?
Yeah,
It was Qatar. That they were going to win the match 1-0, apparently, and a load of the Paraguay. Is it Paraguay they played?
Ecuador.
Ecuador that had bets on it apparently. So, but
No,
it
they was
didn't
all
happen.
walking out after 60 minutes.
Oh, really?
Yeah, there was. I saw this one yesterday, which is pretty good. I thought everyone was transferred the money to the wrong Valencia.
Oh no.
Uh, yeah. Anyway,
Um,
not accusing anybody of anything dodgy, of course.
no, of course
Um,
not.
no, we shouldn't be doing that. Anyway, let's get on with the latest headlines and what's moving markets over the last 48 hours. So the Fed December meeting remains in focus. In comments on Friday, Fed Governor Collins stated that the central bank needs to increase interest rates further and that rates will need to remain at a high level for some time. She added that the recent data had increased the top of the range where rates are likely to go, while also commenting that there is a risk that the Fed may go too far in increasing rates. According to Collins, all possible rate hike increments should be on the table in December. The Fed president of Atlanta stated that he was ready to move away from the 75 basis point increments at the December meeting, while he expected a further interest rate hikes of 75 to 100 basis points. The ECB, on the other hand, have indicated that rate hikes are set to slow. The President, Christine Lagarde, stated that inflation is far too high and that interest rates are expected to increase further. Council member Knott stated that the pace of rate hikes is likely to slow as policy tightens further. He added that he expects rates to reach broadly neutral territory at next month's policy meeting, limiting pressure for further aggressive tightening. We've seen a bit of switch in the smart money, if you like. The latest CFTC data recorded a switch to net short non-commercial dollar positions for the first time since July 2021. The net long euro position also increased to its highest level since March 2021, increasing the risk of euro selling. The coronavirus situation in China, concerns have returned. There were fresh concerns over the Chinese coronavirus trends in Asian trading on Monday, with a further increase in cases and a small scale lockdown, which cast further doubt over the ability to ease restrictions. Risk conditions were less confident on Monday, with equities losing ground early on. The dollar has posted net gains and is up by around 0.5% as things stand at the moment, triggered by that dip in risk appetite on Monday. So that's it for the latest news. Let's take a look at some charts. Steve, you can kick us off this morning with Bitcoin.
Lovely, thanks, mate. Yeah, well, I'll dive into we'll talk about Bitcoin a bit more on the gun to head trade idea, but let's just go through the timeframes just to see what's going on. Last week's candle was like a really interesting one. It's a little tribute to TAF. It was a very dodgy candle. Doji, normally we'd pronounce it, but yeah, did sort of like a real sign of indecision. Now we've broken through this support level. So we've got off to a back foot start this morning, start of a new week, Monday. We're going down. We're looking to test the new lows that we've seen, lows or prices that we haven't seen since November 2020, so 2 years ago. And we're looking at a low at the moment where the support will be 15,632. This is the weekly chart, remember. We've got this head and shoulders formation, which is playing out. So broke through the neckline and marching on to the measured move, which is a lot lower than here. I was looking at this sort of bearish pennant formation, and that's now got 3 points on the chart. It's gone through the third point. We've had a little dip below That's where the third point will be, and really sort of like looking at where the resistance really comes in. We're posting these lower highs, so we've got like a band of resistance now that's forming just above where current price action is, and I would say all the way to there. So prices have got to get through this level to really sort of like claw back any hope of advancing cryptocurrency or Bitcoin further. We're well below the Ichimoku cloud now, and we've been below the Ichimoku cloud and toyed along with it for a good few months now, but this is quite a nice bearish break below it. The 200-day moving average comes in around about 22,300. Looking at the 4-hour chart, no, let's dive down into the daily chart. There was me on the gun to head trying to sell this all week. Managed to post a win, I think, on Friday. Just wish I'd have been able to hold it over the weekend. It would have hit the target, which was really nice indeed. Didn't really go much against me as well, so that was a good one. Other cryptos I like looking at, there's a reverse trend line that we've been down to on the hourly chart for XRP, and it's bounced off there nicely, but still under pressure. Resistance coming in now in the shape of a previous neckline for this double top formation. So we're breaking down. This sort of like indicates that let's get a measured move target out of this. There we go. 32.5 is the measured move target for this double top formation, which is formed by this eye here and this eye here. Yeah, double top neckline, measured move down to here. So, and that would sort of like find the sort of like the support area that we've seen going back again to let's get the levels, going back again to sort of like the early November the 9th. So yeah, that's looks like where we're heading on the back foot. Cryptocurrencies, keep an eye out on those, be careful with those. Now looking at gold, interesting formation on the 4-hour chart. Let's take a look at the weekly first. Weekly made a new high. We got up to 1786, was it 1786.5, and then moved lower over the week into the close Friday, and we've moved on, kicked it further lower today, been down to 1742. On the daily chart, we were aware of resistance. The 38.2% fib came in at 1789, and the 1800 to 1810 area of resistance that we had. The 200-day moving average was up at 1800 as well, and we've pulled back nicely from there down towards the supportive area that we've got between 1730 and 1735. That'll be a good test for the bulls. On the silver side of things, let's take a quick look at silver. We drew up this potential inverse head and shoulders formation. We broke through the neckline, but we've shied away from it. This resistance has proved too strong. We are above the Ichimoku cloud, but the resistance from May to June time has held, and we didn't manage to push our head above there. $22.50 was the real top of the resistance band that we had. So pulled back nicely. We've had like a whole week of bearish price action. We almost engulfed the previous week. So that's like more of a bearish dark cloud cover. So that's a significantly worse looking candle than the gold. Remember the gold, it only pulled back a little bit. So gold's still on the front foot. Copper, in fact, on a weekly basis, posted a bearish outside candle. So that's really negative for copper. And if we look at the daily chart, again, we stalled just in front of the 200-day moving average. That was coming in just below $4. And the reversal from there has been pretty significant. Support now expected around about 350. That would be the cloud support. Also, we've got a moving average crossover there. It's the 55-day crossing over with the 100-day moving average. So that's something to think about as well. Taking a look at oil on the week. The last couple of weeks have been bearish. We've got below the support line on the WTI crude oil that was coming in just around about $81. We're closed below there on the week, and we've opened up, and we're still below there this week at the start of the new week. We were looking at a little bit of a supportive, well, a little bit of a triangle formations, which basically, we really look for the break either way. It was below the cloud. We were getting price action moving up towards the 100-day moving average. Poked its head above there, stalled, and reversed sharply lower. And now we are on the back foot. We're looking really at the next support coming in around about the September lows. So that's down around about $76, trading at 79.90, so $4 away, not very far away at all. On the Brent crude, similar sort of price action, obviously. And yeah, again, poked its head above the 100-day moving average and reversed sharply lower. Back down below the cloud. It's broken through the support that was coming in at 88.10. And the next level we're looking at on the downside is 82.46. So again, $4, around about $4 lower than where we're trading now. So everything seems to be a little bit looking a bit dodgy for the old commodities at the moment. I presume we've got some dollar strength somewhere that has led to this. So I'll let Joe take over from there.
Thanks, Steve. Yeah, you are exactly right. So we've seen a decent reversal on dollar index over the last few sessions. We, on the corrective side, came up just shy of the 38.2% fib level at 105.13. And prices have rallied quite nicely from there. Now into an interesting level of resistance. You've got these two lows, one from the 26th of August and another from the 13th of September. We saw an impulsive breakdown through those levels back on Friday, the 11th of November, and now we're seeing a retest of that today. So this could be quite pivotal. We could see some resistance form here and prevent further upside in the short term. At the same time, we could also maybe see a little bit of an overshoot here. And maybe what we're in the process of doing is actually forming a larger top pattern, which could potentially play out. So we'd go probably something like this, left shoulder here. This would be the head. Then we'd maybe in the process of forming some sort of right shoulder at the moment. And that has the potential to be a downward sloping head and shoulders neckline. Very speculative at this stage. Need to see a little bit more from that before we can even contemplate that being a potential setup. But we are into this resistance level today between 107.58 to 107.68, which may attract some selling attention. That CFTC data that we saw over the weekend indicates that the smarter money, if you like, the commitment of traders report, has seen a shift to dollar shorts. But in spectacular fashion, we've seen reversal as that has been as that number has been published. So maybe that will be just a bit of light relief before we do actually see the selling resume once again. Let's take a look at Euro US dollar. We can see that's failed into this resistance level at 103.48. We did see a couple of closes above it last week, which indicated that we were getting some acceptance of price above these newly formed or these recent resistance should have then acted as supports, but they haven't, and we're moving lower. So maybe we'll see a retest of the bottom pattern that we've highlighted here, the support of which comes in at 100.97. So looks to be on the back foot, down by 0.63% as things stand. Looks to be the worst performing currency pretty much on the list today. Looking at some of the other majors, we can look at Aussie versus the US dollar. We can see the downtrend resistance has done a pretty good job at preventing prices from moving higher. We saw a rally into these levels last week and prices stalled, and we're on the back foot as things stand, down by 0.6% there. We did form an inverse head and shoulders, a very neat looking one. We've got the neckline of that pattern down at 65.22. So I wouldn't be surprised if we do get a pullback to test that newly formed support and see what sort of buying reaction we get, if any, at that point. Let's take a look at cable. That's also down by around 0.6%, 0.55% as things stand. This doesn't look as bad as some of the others. We have seen a break of the downtrend. We have seen some acceptance of price above resistance at 117.59. So let's see if that can continue to do a job. I think any pullback towards 116.45 would be a pretty good opportunity to buy on cable, but let's wait and see how that plays out. Look at New Zealand dollar, US dollar, not really an awful lot going here. It has broken out through the downtrend resistance, unlike what we saw with the Aussie currency, and we did see a pullback to retest that newly formed support, downward trending support, and that's done a pretty good job, but price is pretty range bound as things stand at the moment. Looking at dollar CAD, we had a really nice Head and Shoulders top form here. We've seen a pullback to a 38.2% fib level. The measured move target of the Head and Shoulders is down here at 130.14. So still expecting lower prices, but it looks as though we may get a retest of this neckline of the Head and Shoulders, which is at 134.95. Take a look at dollar Swiss, a really strong reaction from support on this one. So we've got a number of supports to consider here. First of all, we've got this uptrend line, the blue diagonal line on the chart, which pretty much pinpointed the reversal point here. And we also had this swing low from back in August. Both of those together has provided some attraction for the bulls, and we've seen a really nice move higher from that. So it looks as though it's going to continue trading within this range, which is forming at between 93.70, potentially all the way up to 100.49. So it looks pretty good at the minute. I'm not sure how much this has got on the upside. I'd probably be looking for some fibs to give me an indication of where the rally might peter out. So we've got 38.2 here at 96.58. That would be the first target that I'm looking for on the upside with dollar Swiss. Let's look at dollar yen. That's finding some support around 139.38. So we saw the break of the channel here. We also saw a completion of a small top pattern on the break below 145.10. Prices have pulled back to 139.38 and held around there for a little while and now starting to push higher. So again, upside may be limited towards 145.10. That would still be a decent amount of upside potential on that. In terms of percentages, that's quite strong. Yeah, about 2.8%. So looking pretty good for the time being. We just have to wait and see about these China coronavirus situations, really. If it is as bad as it's being made out to be, and we are getting these small scale lockdowns, it indicates that they are committed to this COVID zero policy, which would be a bit of a concern and potentially hinder growth on a global scale if China failed to open the doors. Okay, I think that's pretty much it on the currencies. There was one more that I just want to follow up on, which was Aussie New Zealand dollar. Not one that we tend to trade too much, but technically this is still playing out really nicely. So we saw this bullish channel, then we completed a head and shoulders top, then we completed a bearish flag. We broke down through support at 108.80, and we saw a gap lower this morning. So any retracement towards 108.80, I think, would be a good opportunity to sell, looking to target this measured move of the head and shoulders top pattern, which comes in at around 105.52. So that's it from me.
Nice one, Joe. Going to take a little look at the indices now. I'm going to start with the Dow. Let's take a look. Anything? Oh, well, yeah, I suppose the weekly chart is worth a little look. We posted a new high last week, highest level since the week of 15th of August. However, we did close lower, and that's a real potential for an evening doji star formation. So really need to see a bit of a sell-off this week, and it seems to be primed. It feels a little bit bearish already. I know it's only Monday, but already I think we're seeing signs that there's sort of like the bearishness coming into the end of last week is filtering through into this week also. And if we get a bit of dollar strength, then I expect we will see some weakness in the indices. So on the weekly chart, yep, looking weak. Weekly chart. Daily chart, we can see this indecision and this sideways indecision, which resulted in the doji candle, and this is also very relevant as well. We saw a nice move Friday, quite strong close Friday, but we're starting to give up those gains already this morning, and the market hasn't actually opened. With that opens this afternoon, obviously at 1:30. So levels to watch really on the downside. If we do manage to get a break of Thursday's low, then I think that will open up the downside. 33,155. Resistance coming in a range around about 34,000 either side of that, and then above that we've got 34,265 was the swing high from the 16th of August. The Nasdaq, the inverse head and shoulders formation is playing out at the moment. We're within the Ichimoku cloud. So we do expect a heightened volatility, and it is a resistance level. We've stalled at this 100-day moving average and reversed sharply from there. The 200-day moving average is still away. So looking at the 50% Fibonacci level. That's where the retracement level. That's where we stalled. That was with the swing low, the swing from the highs of the 16th of August down to the lows of the 13th of October. And yeah, so support coming in here. There's a range of support below 11,500, and above is around about 12,100. So that's the levels to watch in the Nasdaq. The S&P, that really played out nicely. The inverse head and shoulders reached its target, or just stalled a tick in front of it, and also in front of the 200-day moving average. We saw a stall and a shooting star candle form, so that's negative. The Ichimoku cloud, the top of it, has provided some support along with the 100-day moving average, and we're sitting just nicely above there at the moment. But if we do get a break back below 3,900, I expect an acceleration lower. As I say, resistance coming in around about the 4,044 level, and above that we've got the 78.6 that comes in at 4,146. Again, close to the swing high, or the high we saw on the 13th of September. So that's the levels to watch there. I'm happy to jump into the European indices as well, Joe.
Don't mind taking a look.
Yeah, go on in.
Yeah, fine. Okay, let's take a look first of all at the Euro Stoxx 50. So we can see here that it's actually looking okay. It's down by 0.38%. Obviously, we've seen a very strong move to the upside in recent weeks, and not really any major signs of reversal, although we are approaching a few major levels of resistance that I've got drawn on the chart here. So we've got some previous swing lows. You've also got a 61.8% fib at 3955. So we appear to be coming up just shy of that. Potential, I think, for maybe a bit of a pullback towards the 3822 level. So it'll be interesting to see if we get any reaction in front or around these resistance levels that we've highlighted here. Let's take a look at the French market. We can see that that's made some attempt at breaking out above resistance at 66.26, still holding on to this short-term uptrend line as things stand, only down by 0.4% so far this morning. So maybe some potential that it can hold on here and maybe continue to kick higher. However, if it does break through this short-term uptrend, then I think that would maybe indicate a pullback in price. If we take a look at DAX, we can see that that is into a key level of resistance today at 14,457. We've got a 61.8% just above at 14,576. So had a really strong move to the upside in recent weeks, but could be in the process of stalling a bit here, and we may see a little bit of a pullback. On the FTSE 100, that's trading in a really strong bullish channel in the very short term, but coming under a little bit of pressure today as we approach some key levels of resistance. We've got a 78.6% fib from this small move here. So from the highs in August down to the lows in October, the 78.6 is coming in at 7391. And as we can see in recent sessions, that has done a very good job at preventing prices from moving higher. We also still have a sequence of lower highs. So unless we can get above 7430, then we may see a bit of a pullback on this as well, potentially down to 7105. So a little bit of indecision on these indices this morning, it would seem. Okay, that is that. Let's take a look at the gun to the head trades from last week. So let me just bring up the TradingView profile where we post all of our trade ideas. So just to reiterate what it is we do.
Yeah, putting the gun to head reminder on there.
Thank you, Steve. So each trading session, we pick live ideas on the video. Each of the ideas must have stops and targets. We have to come up with these ideas as if we had a gun to our head. What would we trade right now? So all these ideas are placed at market. The trade ideas would expire at 9 p.m. UK time, or when the stop or the target is hit. And if anybody wants to check these ideas out, you can do via our TradingView profile at signal_center. So Steve was selling Bitcoin. Again, I think it's probably the third or fourth time in a row that you've done,
felt
that.
Like it.
So still looking for lower prices. We had a triangle pattern that Steve had identified. If we click the play button, we can see that it was onside on the Friday close at 9 o'clock, and he was onside by 0.32R. However, that has gone on to hit the target in the preceding hours. So obviously that traded over the weekend, never really threatened Steve's stop, and eventually went down to his target. I was selling Euro Sterling. Looked as though it was forming a head and shoulders top on my chart here, which was an hourly chart. If we click the play button, we can see there that it did move lower. and at 9 o'clock I was 0.65 R on side, and Taf was selling euro US dollar. So his parting gift to us was a 0.59 R winner on euro US dollar.
Nice.
So 3 new trades coming up today. Two new trades. Only Steve and I today. No more Taf, sadly. Steve, you got one ready?
Yeah, I have. Yeah, I'm going to go with Germany 40 selling DAX. Really, just like looks like we're stalling at these levels. We've got potential bearish dark cloud cover forming today. We've still got obviously a long way to go today, but we've just posted a new highest level we seen since the 8th of June, and we've reversed very sharply indeed from there. If we look at the hourly chart, you've got the potential for maybe a double top pattern here. If we manage to get a break of support, 14,359, that would be the ideal time to enter. A break of support, let's get on it. That's confirmed. The reversal is in place, and the close below that 14,359. However, we've got a gun to head. We've got to make a decision now. So this is I could bring the risk in. I might actually bring the risk in, and maybe just have a 50 tick risk. And that will give me a much better risk reward on this. This is 5-to-1 risk reward. I'm looking for that moved back down to the swing low or spike low that we saw on the 15th of November, last Tuesday. So yeah, that's my trade idea. I'm going for that. I'm really putting everything on it. In an ideal world, you'd be waiting to get a break, as I say, selling break here. The stop would be above there, and maybe target down there, which would be, but that'd probably be around about 2-to-1 maybe. I'm going for 5-to-1 because I feel quite nice about this.
Yeah, I had the same thing on my chart drawn, so obviously not going to do that now. But
you can do it.
Yeah, no, I've got something else. It's all right.
You might have a different risk reward strategy. Yours might work, mine might fail.
Well, I was definitely going to go above the high, that's for sure.
Exactly. So
you've got your stop right in the middle of a gap.
Yeah. So that might be the sort of like a lesson. We've sort of both done it. You've done it properly. I've been more aggressive with it. So that might be a good lesson for everyone tomorrow.
Maybe so. Well, I'm going to take a look at the HS50 or Hong Kong 50. Not market I tend to trade very often, but looking at the setup of it at the moment, it is one that appeals to me. So this is the daily chart. Starting off with that, we can clearly see it's in a downtrend. Very much a sequence here of lower highs and lower lows. In recent sessions, we have seen a pretty decent corrective move higher, but it's just stalled into this previous swing low from back in March, in the middle of 2 fib levels as well, the 38.2 and the 50%. And if I look at the intraday charts, just going here to the hourly, what I've spotted is a top pattern here. So either a double top, or maybe you can make some sort of loose head and shoulders pattern. Let's just go with that, shall we? Something along the lines of this. Not exact, but I think the double top is probably the preferred. Anyway, we've seen a breakdown through whatever we're calling it, the neckline of that on the this morning at 1 o'clock. We then seen a retest into that level, which seems to have stalled. So I'm going to sell it at 17,637. I've got a measured move of the double top that comes in at 16,936, and I've also got a fib level at 16,976 of this entire move here. So from the lows on the 31st of October. So a confluence of target levels to look for. That gives me a target. Well, I'm going with 19,676, which is the fib level, which is the closer of the two, and going with a stop loss at 17,792, which gives me a risk reward ratio of 4.25. So Steve and I are looking for some humdingers on the equity indices today. I mean, this is already down by 1.46%. So not looking great compared to the other indices. Let's see if that weakness persists as a result of the China news over the weekend. So that will expire at 9 o'clock. We'll get those published to our profile in a moment.
Nice one.
Okay, data-wise today, let's just take a look at what we've got on the day ahead. Not an awful lot. We actually have to wait until tomorrow morning UK time, 7 a.m. until we get some high-impact data, and that's coming from Australia. The Reserve Bank of Australia Governor Lowe is making a speech. And then on the 23rd of 23rd this month, 2 days time, we've got the global PMI flash data. So pretty quiet day on the data front today. Let's keep an eye out for the macro news, I guess, to see what impact that has, if any, on prices. And good luck to England today in their first World Cup match.
Yeah, go for it.
Go for
It's
it.
coming
Get it
home.
done, boys. Yeah, a bit early for that, but yeah, let's see. Okay, thank you everybody for watching. Hopefully that was enjoyable to kickstart your trading week. We'll be back tomorrow with a further roundup. And until then, everybody, trade safe.
Cheers.
Bye.